Hello, everyone. Maybe some of you have heard of Tesla. Maybe if you wanted to own a Tesla someday, a Tesla automobile, at least that's what they're most known for. Let's look at their as an example of a real world income statement. You see their statement of operations, which is another term for the income statement for Tesla Incorporated. And perhaps what would stand out right away is how their revenues, which are listed first, as we talked about, revenues is the first thing on your uh, income statement, have jumped as we would expect because of their popularity from 11 billion to 21 billion in just 1 year. That's almost doubled in 1 year. Then on the income statement, you have the cost of the revenue. This is the cost of making the things they sold here. Sometimes referred to as cost of goods sold, but a generic term is cost of revenues. And that this is the car. So, for instance, you see the sales, automobile sales were 17, and those cars cost them to build 13.6 billion. All right, and so each of those match up. You subtract the cost that it may take to make it. That's our first expense. This is an expense. Then you have gross profit. So this is a subtotal, taking revenues, subtracting our cost of revenues or cost of goods sold to get gross profit. Then our other expenses are listed. Notice that because this title says operating expenses, these do not have the term expense next to them. We know that they're expenses because of these are costs that are going to benefit this period and not future periods. So here's the list of expenses, and we see, and what I wanted to show you is that not every time do we have net income. In this case, our expenses are higher than our revenues. And so if you look at the bottom, our net, we don't have a net income, we have a net loss. That's the opposite. So while most of the time in our textbooks we always show the positive in that we are making money or profitable, this situation, our result of operations actually made our net assets go down. So as we've discussed, net income, profitable operations makes our net assets increase. This makes it go down. You see that has been the case for Tesla since the last 3 years, 2016, 17, and 18. So that's what is. The negatives are usually shown in accounting as parentheses because it's a lot easier to read than a little minus side when you're talking about all these numbers. So why would investors still invest? Well, they're counting on these huge increases in sales to eventually wipe out this net loss and turn it into a net income, substantial. And you can see they made some progress going from a net loss of 2 billion to only a net loss of 1 billion, and then maybe to break even, zero, and then maybe even a large income the next year. So that's kind of they're looking forward and seeing this progress with regard to sales, eventually making it so that there is a positive net income.